We are with Ryan Moynihan, Chief Executive of Bank of America. Obviously, a lot to talk about with Russia, with Greece today, but I want to start with U.S. regulation. Do you share the view that U.S. bank regulation threatens the U.S. economy?
Well, I think that we have to be careful that the amount of regulation of capital is balanced with the need for the banks to do what they're supposed to do, which is to help the economy go forward and help lend and do things like that. And so I think that's the balance everybody's trying to get straight. The industry has viewpoints, other people, investors have viewpoints, and so I think everybody's trying to balance that tightrope between saying how much capital, so we know this never happens again. On the other hand, how much, if we go too far, we actually stifle growth, and it may be insurance that's an overabundance of caution. So that's the tension.
What do you think about the capital surcharge for systemically important banks?
Well, I think our view is that if it comes out, we don't know what it's going to be yet, but if it comes out to a reasonable number, and the idea that gives people confidence that the banking system can run in a way that everybody will support it, and support it in a sense that we'll be done with it and get a set of rules and go. I think we have to be careful of competitiveness on a worldwide basis, how things are counted. There's lots of technicalities in it, but I think if it comes out to some of in a reasonable range, I think all of us can go. We just need to get through it so the uncertainty's gone and we can figure out how to change the business model, adapt to it.
Jamie Dimon's been pretty vocal with his views.
Right.
Did you agree with him?
I agree that if the capital goes too high, that it's going to cause us to constrict. Just think, every 100 basis points of capital for us under the new regulations is about $18 billion of capital. And if you multiply that times 10, 12, or 15, that's how much we have to optimize the balance sheet. So the question is that trade-off, and that's what we've explained to in our dialogues with various parties, saying that, look, if at 100 basis points, that's $180, $200 billion of loans that we otherwise wouldn't make it.
Just to stop you there for a second, couldn't you still loan but just have a sort of lower return on equity?
No, because the equity that is meant to provide the buffer can't be put to use, or else then you need more of it. You think of it as a stack. So if you stack another brick on top and use that brick, you got to put a brick that you aren't using on top, and that's the analogy to take forward. So this capital really can't be used to drive the business because it has to not carry risk, or then you need more. And so therefore it is excess in good times. It's meant to be there to provide a buffer in bad times. So by definition, you can't leverage it.
Obviously, you're aware of the skeptical view that the real issue here is banks are concerned about their profits being constrained.
Right. Well, the issue is if you impact the returns in our business to a point, investors are going to look around and say there's other places to put the money, and that's what you've actually seen in bank stocks generally, is that there's been an impact. And so we either have to be able to reprice to get to return or get a return off the current pricing structure, so investors can sit there and say this is an industry compared to telecom, compared to technology, compared to oil and gas, that we'll put our money, because investors have a choice to invest in industries or not. And you need the financial services industry, which is one of America's industries, which is a worldwide competitor, worldwide market shares, and does a good job for its customers in the U.S. to continue to grow and prosper. I think to have a growing and prospering economy.
I want to ask you about Greece real quickly, because I think we only got another minute here. But you've said that what's going on in Greece is no big deal for the Bank of America. Right. How big of a deal is it for the U.S. financial system? I mean, some people are saying this could be a sort of Lehman moment.
Well, I don't know how people characterize it. I'd say that the market's got a view on Greece every day and how the pricing that goes on and the reaction to it. I think the overall issue is the continued. We had a deep recession on a worldwide basis, a deep economic recession, of which a financial crisis, so to speak, came out of that. And I think Greece and Ireland and all these things just keep reminding us to slow down on some of the consumer spending. All keeps reminding us that we are still getting out of this thing. And I think that's the impact on the markets, is it causes people to pull back again. And so if you think of last year at this time in May, the capital markets really shut down because of the question about Europe. This year, the same questions arise, but the capital markets will continue to go through. So I think it's having less of an impact, but it's on everybody's mind. Until the situation solves, it's on everybody's mind. Right. And so that's the issue. Is we got to get some of the stuff behind us so we can all go forward.
Ryan Moynihan, we're going to leave it there. Obviously, the Chief Executive of Bank of America.